What's going on, fellas? Good time in New York this week, John.
It was your first time at PubKey, Brady, and it was my 75th time at PubKey.
Yeah, it was the first time I was back in New York in quite some time as well. So it was fun to be in the city. A little cold, a little rainy, but that didn't get us down. We walked a lot, Steven. You would have been proud about that.
Yes.
Despite the rain.
I wish I was there.
Yeah, missed you there, man.
Yeah.
We saw Michelle McCory. She came to the Swan Salon, which went great, by the way. We had, 75 people there probably. Lots of great conversations. We did a Swan Signal live there. We had Alex Stanzik and Jeremy Showalter sit in for you two guys. Did about 20-minute riff. That was fun. And apparently Michelle loves the show. And so shout out to you, Michelle, if you end up seeing this one. And we'll definitely take you up on your offer to bring you on the show sometime. Be really fun.
I think we got to get her. We got to get her in the chair. It'd be great to run a Swan Signal live with Michelle.
It would be. It would be. All right, I'm here with my fellas here, Steven and John and Brandon. We are coming to you live every Friday, 11 a.m. Pacific, 2 p.m. Eastern. So you can catch us on YouTube. You can catch us on Twitter. I think we're on LinkedIn, but we don't have many people watching on LinkedIn, which makes sense. So if you are watching on LinkedIn, thank you for being one of the few that come to us through LinkedIn. We appreciate you. And thanks to Mara for helping to support the show and for helping to supporting decentralizing and securing the Bitcoin network. So let's get started. We got quite an agenda. It was a slow week. It was a slow week until today, guys. And a bunch of news dropped today. A little gift in our laps. We got a nice little price pump. So it's a happy Friday. Where are we going to start, guys?
Well, we got this. We really were going through kind of a slower news period, which is funny to say because there's been more happening every week this year than in all of 2018 in some ways. But it was in some senses a little bit slower. And then, oh man, like this Friday, we just get blasted with it from the Sovereign Wealth Fund out of the UAE buying Bitcoin, custody news, Wisconsin. So happy to start wherever you guys want to. And I know we've given people a little bit to join, but it's a ton of great stuff.
Yeah, it's, 10 years ago, 10 years ago, it used to be a huge deal just to get a mention in the mainstream media, right? Like in any given week. So then that was thrown around on Bitcoin Twitter. Yeah, the CNBC's talking about us. It was a big deal. It happened, right? But it was like few and far between. And now we're just getting news so compact. So it did feel like a slow week until today. So let's go ahead and start with Abu Dhabi.
Dhabi. One comment, Brady, here quick before we go into that. Right. I think that the fatigue is maybe what I'm feeling right now is there's so much Bitcoin news. It's so mainstream from all corners of the world that it goes through my timeline. It doesn't even register anymore. Another state with a bill, another country doing an LBE strategy, another clip from Joe Rogan talking about Bitcoin, right? 5 years ago, each one of those would have been a week's worth of coverage. Now I give it like 30 seconds in my head and we move on.
Yeah. How about Dalio on CNBC again mentioning Bitcoin, right? Like that would have been the biggest thing ever. That we're like, we might not even touch on it today because we have so much other stuff.
Exactly.
Yeah. No, that's a good point.
We're spoiled with good news recently.
Yeah, it's not too much winning yet though. Let's win some more. We got some more to do this year.
I've got a really high capacity for winning. I've been training for this for a while. I'm not even tired of winning yet.
I mean, we have like 3 years worth of losing to swallow, and we get really good at that too. So let's just spend some time.
I could take 10x winning easily. Not even a problem. Like we're talking orders of magnitude more winning here.
Let's do it. Let's add a zero. Let's add a couple zeros. Let's start with Abu Dhabi. Abu Dhabi. We were hearing some rumors that a MENA country was stacking some sats. So it seems like it may be Abu Dhabi, maybe others as well. The Sovereign Wealth Fund of Abu Dhabi has bought about $36 million worth of Bitcoin through an ETF, signals growing institutional interest in Bitcoin. than traditional finance markets. Now, this is a very small percentage of their the value of their sovereign wealth fund, which I saw early this morning. I can't remember, but I do remember that it was a small percentage, but still definitely of notes. And this to me is the idea of hodl FOMO, where you finally get this kind of mass understanding, a realization that Bitcoin is, something to stay, something to hold for the long term. It's capital that you can build on for decades and decades to come, and maybe even generations, right? And definitely generations, in my opinion. And so now that this understanding is being kind of spread, there's going to be a fear and a game theoretic, just all out blitz to get some exposure to Bitcoin, buy some Bitcoin directly into these sovereign wealth funds, into strategic reserves, into corporate treasuries. So last cycle, I was looking for the hodl FOMO when the institutions came in. I think we're seeing institutional demand ramp up now. And, imagine what leaders of other countries, Steven, they look at this, and these leaders, let's just take Trump, for example, very competitive.
100%.
He's like, okay, Abu Dhabi's doing it. Like, we're falling behind. We got to go. And so it's going to be a race, man.
What did you think America first went? Vibes, papers, essays? No, stacking stats and beating Abu Dhabi.
Exactly.
So I think there's a few things to, lay out here for people. This is a disclosure. Abu Dhabi and the Sovereign Wealth Fund, they didn't decide to make this disclosure. This is a mandatory disclosure because this position was in the ETF. So this comes out because of that. Now, they're obviously aware that that was going to happen. They knew that was going to happen. But it does not mean that that's all that they own, right? And I've heard it from a number of people. I think it's pretty reliable that they do own other Bitcoin, some of it from a while back. Some people have said as early as 2018 they were looking into it. But so while they have a $500 million ETF position, that doesn't preclude them from having some of these larger positions in other entities and as a spot asset, which they don't have to disclose. And so if we take that kind of as a prior and as a premise, I think there's a way you can look at this. I was talking actually with Magnanimous Maxi on Twitter, and we were talking about the concept that they might be slow rolling this disclosure. What does that mean? It means they know that if they buy the ETF, this announcement was going to come out in a couple months. They want to have that number sized appropriately, right? Because if they come in too big, there's a probability where you could spook other countries and other systems. And like if you come out with a $40 billion position out of nowhere, that's going to make a lot more impact and could change what other countries are deciding to do, rather than saying, hey, here's a small position. This is really pretty small for a country, but it's material. It's $500 million. And I think it's small enough that it gets people talking, it gets people interested, but it's not too large that I think it spooks anybody. And this could be a very purposeful choice by them.
100%. And just to put some numbers around the size, which again, Steven's point is that, yes, they disclosed having 437 million of the Bitcoin ETF. That doesn't mean that's the only Bitcoin exposure they have. In fact, I'd say it's probably unlikely that that's the only Bitcoin exposure they have. Just looking up what kind of percentage of total this might reflect. So this got reported under Mubadala Investment Co. That is one entity that makes up the broader Abu Dhabi Sovereign Wealth Fund. So they also have the Abu Dhabi Investment Authority. They also have a couple others here. Mubadala, I think, is the second biggest one. But basically, if you add up all the assets of those entities, it looks like it's around 1.7 trillion. So 437 million out of 1.7 trillion, that's not like, a huge position. I think we're talking like 2 basis points or something like that. But again, that's probably not their only Bitcoin exposure. And I think, it's likely to grow from here, but even if it is their only Bitcoin exposure, you got to start somewhere. And I would say, maybe they're starting at 2 basis points, but likely to grow over time.
Absolutely.
Brandon, you have any thoughts?
I gotta assume the U.S. takes this very personally, Right. So any sort of SPR chat, I think, gas on the fire over in the Trump administration. And I think, Steven, your comments are interesting around what's the message they want to send to the market? Because the question would be, are they done buying? Do they have their position, or are they still buying? Right. If you're done buying, you want it to seem like this is a FOMO situation. Everyone should follow me. But if you're still buying, you wanna be a little more guarded with your messaging.
100%.
It's true. I do want to say something about the sovereign wealth fund in the U.S. So the executive order directed Bessent and Lutnick to put together a plan within 90 days and deliver the plan. Now, Congress does have the power of the purse and does have to approve new funds for investing in a sovereign wealth fund, unless you can find funds to redirect, funds that are already congressionally approved, to redirect to a different purpose. And there are some rules around that as well. So the plan that they come with in the next 90 days will include, like, how can we get the funds to invest, right? Maybe we can redirect, like we can get some of the funds by redirecting this, and we should be able, that should be, legal and pretty clear. And the rest of the funds will need to be approved by Congress, et cetera. So it's not like Trump can just say, okay, we're putting together, a strategic or like a sovereign wealth fund, and we're just going to invest $1 trillion, in all these different assets. So there is, like, just to set expectations, there's some hurdles to jump there for that to be established. Now in Abu Dhabi, it might be a different case.
Yeah.
Brady, question on that. Can they sell federal land as is and stick the proceeds into a sovereign wealth fund, or lease the land, or lease mineral rights, things like that?
Yeah, I think so, because the Department 100%. Of the Interior has control over the federal lands, and the Department of the Interior is an executive branch department. So there would be, I think, much more, space for Trump to work independent of Congress when it comes to selling lands. I don't know exactly, but I do know that it is a department of the executive branch. So definitely would be, and it doesn't involve spending. So, the power of the purse idea of Congress, it would involve selling. So yeah, I think that would be.
If we have a massive deficit, which we do, I don't think anyone's approving new money going into a sovereign wealth fund. So I think, you got to sell land rights, mineral rights, if you somehow get to a position of TikTok, you should sell it to private interests in the U.S., raise proceeds, stick them in, right? Yeah. And that's consistent with what Lutnick's been saying. I'm in big support of that, to be honest.
There's so many mechanisms for funding this thing. There's just so much you could do. It's a very creative landscape. But this news, right? Like, I mean, this really is big news. And obviously the market responded, Bitcoin's price pumped up. I think it takes a little bit to digest, but it's such a strong signal that this phase of adoption is here. And there's just incredibly real interest in this asset class. And, it was the BlackRock ETF, right? That's what they disclosed owning. Does anyone
believe so? Yep.
So this reminds me of Larry Fink's comment where he said he was talking to a sovereign wealth fund about whether it should be 2% or 5% as the right allocation. Now, I'm not saying that was this sovereign wealth fund. In fact, I hope it was a different one. That would be even more bullish. But this sends a huge signal to the market. And, it's
we've got Wisconsin as well. So this is another big entity in addition to Abu Dhabi. Pension fund in Wisconsin's got another 321 million invested in Bitcoin through an ETF. So we get both of these in one day. I think this kind of HODL FOMO game theory race is going to play out amongst states as well, and we can actually take a quick look at what's going on in the states. Get an update here at this great tracker, bitcoinlaws.io, that you guys can check out yourselves as well. Lots of great information here. Here's all the bills. There's Bitcoin related bills in 32 states. 24 of them are SBR bills, strategic Bitcoin reserve bills. There's a list of all the states here and the status. You can grab details and read the full text of each bill. So this is an awesome website. Whoever put this together, I'm not sure who it is, but has done a great job. And you can see here a little chart on like the progress of these things, whether or not they're introduced or, through the different chambers and then enacted. So there's still, and here's dead bills: North Dakota, Pennsylvania, Wyoming. So yeah, pretty cool. I mean, you just look at all this activity happening, and the race is on in the competition of states too. And this is kind of the way that the republic was built, even though we've been sliding away from that model of governance, for the past 230 years, more and more, faster and faster over the past, many decades, probably since the end of the 1930s, with FDR, we really started seeing much more power shifting to Washington, D.C. and away from states. Still to this day, the republic does have a strong role to play in terms of experimenting with new ideas and new laws, and then those things filtering up to the federal government as well. So states are leading. We haven't seen one enacted yet, but maybe we will before the U.S. government does.
Yeah, there's a huge amount of variability in these bills, both in their chance of success and even what they're really describing. I think your expectation, if you're watching this, should be a huge majority of these fail and don't go through. But I'd be most bullish on the Florida one and the Texas one. I think those are a little more serious, with I think Florida having the most chance of success, and I'm closer to that one. I actually know some of the people involved in it, and so I think it's really quite a real chance there. So watching those closely, but just as observers, don't expect that this is like all these bills go through, or even half of them.
And Brandon gave me the shout out here. So shout out to Julian, the CEO of Apollo, for putting this site together. Great job, Julian. Appreciate it.
Hey, on the Florida, Texas stuff, Steven, does Florida have a crazy high budget cumulative surplus like Texas? I know Texas is like 20 billion or something like that.
Yeah, let me check. I think so. Let me confirm this real quick.
Yeah. It would make, the reason I bring that up is just
2 billion.
2 billion. Yeah. Anyone who does have a surplus already, I think it's just an easier sell to say, yeah, let's, we're already holding assets as like a state version of a sovereign wealth fund. Let's hold some Bitcoin. I think it's a lot easier for Florida and Texas to make that argument than like Illinois or California.
Correct. Exactly right. And you've already had the CFO in Florida coming out and saying they own some already, and this is just like a different capacity to own it. So I think Florida's been very pro Bitcoin. Florida has a budget surplus, and ultimately Florida is Republican run. And, Trump is signaling to Republicans that Bitcoin's cool.
My take on the states is that, yeah, every individual one's different. Most will fail. We're all riding the hype train, but the trend is significant. There's been a massive shift in the last few months. Just personally here, I don't really want to get that involved with politics. I find it extremely exhausting trying to orange pill staffers or representatives of some kind. But in the last 2 weeks, we have Tina Smith staffers coming to our meetup in about 12 days. They're super excited to learn about Bitcoin. She chairs one of the committees related. And then Representative Brian Steele out of Wisconsin, he's the new chair of the subcommittee on digital assets. He's coming to Minnesota in March, and they're hosting all these events. They want to learn, they want to get involved. And so there's something afoot, and like everyone, it's going to take a while for you to actually figure out what's going on. And so I'm sure there'll be nonsense over in the short term, and eventually they'll figure out what this thing is.
Yeah.
One of the
progress. And, the thing is if I think the modification or the addition that I would make for this is like, if you get at the federal level, they start approving something, I think your odds on all of those states go way up, right? Like, I think, if you get a good commentary out of the crypto task force or the stockpile or what have you, you start walking all those probabilities up.
Yeah, we're still at 42% on Polymarket for BSR in 2025, and that'll probably stick that way until this report drops, and then it's gonna either go way up or down, one way or the other. One of the questions we got some questions at the end of the discussion we had at the Swan Salon in New York on Wednesday night. And it would basically boil down to who's selling. Who's selling right now? We're getting these huge buys, this news of all these huge buys, and we're just kind of ranging, consolidating between 105 and 92, 107 and 92, basically, is where we've been for, since November. Who's selling right now? Who's buying? We've got the realized cap is a good chart, a good metric to look at, try to figure out who's buying, who's selling. This is a great one here. Take chain analysis with a grain of salt. It's not perfect. There's some guessing and assumptions that are made in these metrics, but they're, directionally interesting over a period of time. So we've got new whales accumulating here now, and old whales are not accumulating as much now. They're sort of satisfied with their stacks. They're probably selling as well. This is institutions, Abu Dhabis and Wisconsins and MicroStrategies of the world accumulating big numbers now. Realized cap, who's got the definition of exactly what a realized cap is? It's basically where people bought in. The higher the realized cap is basically indicating new buying. That's my understanding of it. Like new people coming in and buying up highs instead of holding from a long time ago. Yeah. And in a bear market, you'll see a lower realized cap because people aren't buying at the new highs or new lows as much anymore.
Yeah. It makes sense. It's those. I mean, it's almost like the arrow of causality is reversed, and it is not that big new whales come in during bull markets. It's that big new whales coming in creates bull markets.
Yeah.
Yeah.
Here's the quick chat GPT definition, because I don't think I did a great job. Bitcoin's realized market cap represents the total value of all BTC based on their last moved price. So providing a more accurate measure of market valuation by accounting for actual transaction prices rather than than current market price fluctuations.
Yeah, this would be like the thing you guys might see in Bitcoin terminology is also MVRV, which is market value to realized value. Okay. And that's like another, in finance jargon, they might call it, that's like market value to book value, which really just means like your cost relative to the current market value. So that's like all kind of describing the same thing. And I think in the chart, if you look at the y-axis, it's only like a couple hundred billion. And I don't know exactly how this was put together, but it might just be looking at, presumably, because it says whales of both. Yep. It's just looking at addresses that have a significant Bitcoin balance. So it's not like the entire Correct. Bitcoin, all holders have a total realized cap of 200 billion. It looks like it's just looking at whales here.
Sure.
Yeah.
And one key point on that one, John, looking at the MVRV, is essentially you're getting a ratio of how up or down the holder base is. And so you get a sentiment of, do the existing holders feel like they're in the money, in which case they might start to sell, or are they, down in their position or not up that much that they'll wait for a future thing. And historically, MVRV gets into like 3 to 5 range. So you're up 3 to 5x on your money, and you see hodlers in mass dumping there. Sometimes it spikes up to 8 or 9 in very short periods, but right now we're at 2.4. So the average Bitcoin holder is up 2.4x on their money, in which case we don't expect a ton of selling at this price, but starting to.
Yeah. To that question of like who's selling, I mean, I think people commonly ask this question when there's a lot of good news and price isn't going anywhere, but I think it's relative. I think it's two things. One, you've had like 4 or 5 different shocks to the market in the last month. You had, DXY and 10-year getting way too high. You had the DeepSeek panic. You had 3 weekends of tariff fears where Bitcoin's the only trading asset that gets sold off. You had trade war tensions. I mean, there's been a lot going on. It has not been a smooth time. I think a lot of people sold from that, coupled with the fact that a lot of these people are up 100% on their coins in like a couple months. And so it's like you've doubled your money. Not everyone has this deep long-term conviction in Bitcoin, and all these negative headlines start coming out. Yes, there's positive news on Bitcoin, but what if there's a trade war? What if the S&P sells off? What if CPI is too hot? What I'm seeing is the market has really been shaking those fears, and the S&P is I think it's at an all-time high, or basically an all-time high today. And it's overlooked all of that. It's gotten through the tariffs. It got through CPI being too hot. It got through retail sales being too low. And so, how the market responds to bad news is as important as the bad news itself. So I think it looks pretty good, but I think holders have really been tested across asset classes in the last month and a half. So for me, that's where the selling's coming from.
And that's your I think embedded in the question that we got in New York a couple of nights ago was like, yeah, why isn't the price higher? It's kind of like, I've done my homework on Bitcoin. Why are not more people not seeing this? And I get that perspective, but just to flip it on its head, like that's your opportunity, right? If you were and that applies to any investment. If you were an early investor in Apple, Amazon, you understood the story, right? You probably were asking yourself the same question, or NVIDIA is a good one, right? Like there were people that probably have invested in NVIDIA when it was like $100 billion company. And they were probably telling themselves like, this thing has so much potential. It should be $1 trillion company. And they were right, but it takes the market a long time to see that. And now NVIDIA is like, whatever, a $3 trillion company. So that's your opportunity.
100%.
Brandon dropped this chart for me to pull up.
I think the key here, I can navigate this one. The green line in the background, that's Bitcoin's price chart going back since 2012, it looks like. So you see multiple cycles. The yellow is the MVRV, so that's the ratio, how up or down are those hodlers. And you see those giant yellow spikes corresponding with the previous cycle peaks, right? So as you would expect, investors are up a lot. Market gets a little frothy. They start dumping when they're up a lot. And this cycle, we topped out at 3, so the average hodler 3x as of like a couple weeks ago. And so we're nowhere near last cycle's peak. Maybe this isn't something we should look at going forward, but it would be very surprising to me if Bitcoin tops out here.
I couldn't agree more. We're not there.
We have not seen anything close to euphoria.
No, and the market structure is so different. I'm just not expecting a repeat in the same way this time. I think this cycle goes on longer. I think it's milder in some ways. I don't think it has like giant parabolic run-ups. I also don't think it has these huge drawdowns. We've seen that already. The market structure for Bitcoin the last year and a half has been a massive pump, then trading sideways for months, then another massive pump. And until that gets broken, that is my base case for what continues to happen. And it makes sense, because why would you sell down Bitcoin 30%, let alone 50% here? The environment is too constructive. Too many people still need to build a position. But that doesn't mean it can go straight up forever. And it's actually good for us that it's not. If you have that massive pump, like the party's over after that point. Like, yeah, maybe you hit 200K, but guess what? Like, it's done now. And the market is going to digest that move for a year. What we're seeing instead is still awesome moves higher, at 100%, 50%, 60% at a time. And then it digests it in a 15% band for, 4 to 8 months. And, I, for one, would take that any day over the previous structure.
Yeah. I think, what we have been talking about for months on this show is that I've been saying it at least for months on the show, that we're going to see much like the floor, for these drops during this bull run like normally like in 2017 and 2020, especially 2017, we had like 35 to 40% pullbacks during the bull market, and it just climbed right back up again, but it shook a bunch of people out. I think the floor is going to be lower now and moving forward. So 20%, 25% max, I would say, like wicks of 25%, 20% maybe. And then instead, we're going to just get, consolidation across a 15 or 20K band for a long time, then just gaps up. And that might be what we're looking at. So the chart's more like this instead of like,
staircase.
Yeah, more of a staircase.
I think that's entirely possible. I'll just throw a potential wrench in that would be if the Trump administration is serious about these like really big reforms to the financial system, to the global trading system, this restructuring of global trade that we've talked about on this show, you could see some market volatility there as the market tries to digest what's happening. Because these might be like changes in policy of policies that have been in place for decades. Yeah. And my view is like, if you see the market, if you see the S&P down like 5 to 10% in a very brief window of time, I think Bitcoin sells off pretty materially. And if it's after Bitcoin pumped a bunch and then you get some sort of headline that people don't know how to digest, S&P's down 8%, like Bitcoin could sell off big there. So I'm rooting for the staircase, honestly, that we just get like, new adoption comes in all the time to just like get a new floor. But I think people should also brace for potential volatility, because I think there's headlines that might come out of this administration that we might see that like we haven't seen in my adult lifetime.
So I couldn't agree with you.
Volatility to the upside.
I couldn't agree with you more on part of that, especially like I think whenever you're talking about these things, like, yeah, if the stock market goes through a huge volatility event, that can throw a wrench in things. And I think that's just a given at any point. If we actually saw assets which haven't really materially crashed, and I don't really even count COVID because it was really pretty brief. It was a fantastic opportunity. But like a true crash throws a wrench in things. But without that, I think, barring there isn't an economic calamity, a world war, blah, 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 I think you do have a pretty golden window for Bitcoin here, where if anything, like I think the volatility risks are to the upside.
I like John's point here. It fits into the fourth turning, the looming sovereign debt, tensions with China, Russia, etc. And so I do expect massive volatility all over the place, unrelated to Bitcoin. And yes, Bitcoin will get nuked in those situations for sure. But when I think about this, the optimism in my mind is no matter what the outcome is, if we have a sovereign debt crisis or we don't, or we change to a multipolar world, China rises, US declines, I would fade that. But there's a chance that happens. No matter what we look at, does Bitcoin do better on the other side of this change? And I can't find a scenario where Bitcoin is worse off after a potential shakeup.
Agreed with that. I think the volatility is going to come from the fact that market participants don't know how to respond to some of the headlines they're seeing. So it might be like short-term vol, sell things because I don't understand what's happening, sell risk assets, meaning stocks, meaning Bitcoin. But then like after they digest it, and there's probably going to be like more headlines, right? Like maybe there's some headline that they think, oh, stocks should sell off. And then like a month later, there's like this Plaza Accord 2.0, or what's being called a Mar-a-Lago Accord. Like that happens. And then people are like, oh, wait, the dollar's being coordinated, devalued, like stocks should, risk assets should pump here. So I think like some of these vol events might be short-lived. And I would, it obviously depends on how things play out. But my prediction is that most vol events that happen in 2025 will be a buying opportunity. Again, subject to the details at the time, but that's what I'm seeing for this year.
Yeah, it's interesting. So this is a topic, and I don't have my mind made up, and this is a lot of kind of shooting from the hip. There's been a lot of concerns, right? Like people talk about so first, let me just say, I agree with you. And like, we've seen that, like, even just in the tariff headlines, the trade war headlines, like the market freaked out and then it kind of got its wits together. And, you know, you saw these kind of headlines that wouldn't be coming out of any other administration, coming out of the Trump administration. And, you know, I think, yeah, we see more of that this year. But beyond that point, there's like a thing that keeps coming up in these discussions, which is like, well, what if Trump's serious about reforming the deficit? What if Trump is serious about Doge and like cutting spending and these things? Like, isn't that bad? Isn't that like bad for assets? And I get why people are saying that, you know, they're looking at like, oh, all this money printing, all this government stimulus and spending, it's driving the economy, it's driving asset prices higher. And that's of course true. But something in me just I struggle to think that if we actually took this incredibly wasteful spending, which is non-productive, which does not really effectively cause capital formation, creates a ton of noise in markets, and you made that better, like I have to think that's good. Like, that's good for America. That's good for assets. Like, I think it's more of like a second order effect rather than, yeah, on that first order, you no longer have like as much of the printing, as much of the raw, like inflationary stimulus. But on the other hand, I have to think things just start to function better. And that's bullish in its own way.
We do have another big piece of news from today. State Street and Citibank are launching crypto custody services. Jerome Powell has been talking about this the past couple of weeks, that banks will start to custody crypto, and we shouldn't get in the way of allowing them to serve clients who are legally engaging in the industry, etc. And we saw this with the repeal of SAB 121, that this was going to start happening. This is, in my opinion, just another step up for Bitcoin in the traditional financial industry and kind of integrating into it. I think it's kind of going to be a Trojan horse type situation. So I think it's a good thing that Bitcoin's integrating into the traditional finance system. And the separation of brokerage and custody is a crucial, sort of investor protection. It builds trust, institutional trust, provides security to investors. The idea of regulatory compliance, etc. While Bitcoiners, many Bitcoiners are typically anti-state, kind of more free markets. I think in this case, it's a good thing for Bitcoin to be treated like securities and commodities and other assets, tradable assets in this country. And I think banks being able to custody Bitcoin this is part of the rails that we need to develop for institutional adoption. And so I think it's just the rules of the road. It's been that way for a long, long time in the traditional financial markets. You've got to separate brokerage and custody. And, who wants to answer why? Anyway, I can say it in 3 letters. If you guys can guess which 3 letters those are.
That's what I was just going to bring up, right?
Yeah.
I think the risk here for the Bitcoin industry is that the old school banks mentioned above, they have a lot of power and influence. They're going to take custody. They're going to issue credit against Bitcoin-backed loans. There's a lot of money to be made there. And then they're going to very quickly whisper into Trump's ear and say, hey, don't you think it's safer if we custody the Bitcoin instead of the FTXs of the world? All the Bitcoin / crypto natives are FTX and we're too big to fail. Why don't you add a little stability to the market and hand it over to us? Ideologically, I'm extremely against this. That's the type of monopoly we don't want. And so hopefully that doesn't occur, but it is a real risk for the industry.
Yeah. I've been writing something on this. I've got some more work to do on the piece, but we're living through the institutionalization of Bitcoin. And I think rightly so, it rubs a lot of people the wrong way because they're thinking like, this isn't what I got into Bitcoin for. This isn't like what Bitcoin was supposed to be about. It wasn't about the banks and custodians and regulation. And one of the themes that I talk about in this is just that A, you shouldn't fight it. And B, just because Bitcoin goes through this institutionalizing phase doesn't mean that later on you can't have kind of a re-decentralizing or a reimagining of use cases and ideas with Bitcoin. And I think like that's my base case. And I think there's a lot of benefits to going through this. I think Bitcoin grows a lot faster, a lot more. It reaches more people. It de-risks the social and reputational costs that you incur by publicly supporting Bitcoin. It gets more people into it. And so it's like largely a good thing there. And on the other side of a, you know, a long and wide wave of institutional adoption, people can push for a new movement. They can push for new ideas, and they can say, hey, this asset that you've just been buying in your portfolio, there's other stuff that you can do with it. Come follow me. We've got some new ideas. That's possible. And not only is that possible, that's my base case. And so I think you need to really embrace this period of time where Bitcoin is being institutionalized. It's just a stop along the way. It is not the final destination.
One point I'd like to add here is that Bitcoin does not need the banks. It does not need the state, but the banks and the state absolutely do need Bitcoin. And so let's just make sure we have our directions correct here. I think that's point number one. Point number two is, okay, if Bitcoin gets absorbed by TradFi, does that lead to TradFi being able to change the rules of Bitcoin? Question mark. Or does another risk would be, does it get people too comfortable in a custodial model and they never end up learning private key management? I think both risks are real. I think oh my gosh, the TradFi is going to change the rules. I think that risk is actually much lower. I don't think that you want to kill the golden goose. As soon as you own the thing, your incentive is to just buy it and hold it. You make more money that way than trying to attack it. And I think we've seen endless examples of people falling in line once their incentives stare them in the face. On the other angle, what happens if we just put people to sleep and they go straight to ETF? They never join Swan Vault and do even collaborative custody, right? I think that's a real risk. But in the back of my mind, who do we think is out there? Like, what are people going to do? 1% of people probably use a Tor browser or less. I don't think more than 1% of holders at maturity will self-custody their Bitcoin. I don't think more than 1% of people will take extreme measures to safeguard their internet privacy, right? I think that's true about psychology. And so I think the question would be, is Bitcoin robust enough to sustain getting absorbed by TradFi? And can Bitcoin survive with only 1% of users in self-custody? I think the answer to both those questions is yes. And on the 1% of users in self-custody, I also would like to say that that's probably at least 30 to 50% of the outstanding supply. So
interesting.
And the reason is Satoshi issued half the coins in the first 4 years, 25% of the coins in the next 4 years. So you're 8 years in, Bitcoin is still an internet curiosity held by ideologues, right? And those folks are overwhelmingly in self-custody. And so I don't know if Satoshi intended that, but
our clients are overwhelmingly in self-custody. It's like 80% of SatSpot in an average month are withdrawn. I mean, that's an 80-20 rule at Swan in you know, to the good side. That's something I think that might be the case. I don't know what the percentage might be, but I think it's a high percentage of current hodlers have self-custody, and that's just going to keep going down as the whole numbers get bigger and bigger.
That's right.
Yeah. I just want to make one comment here. I like Quidam's framing of, are you worried about some, influence over forks, like changes to the network, that kind of thing? Legit concern that we should talk about, but separating it from, are people just going to stay in a custodian? And I think that other concern of, will people just stay in a custodian? Obviously, I want as many people to do self-custody of Bitcoin as possible. To Quidam's points, we have to be realistic about what that is at any given point in time. But in that category of concern, I think you need to remember that that's not an existential threat to Bitcoin as a network, as a protocol. And I'm not trying to diminish somebody who's at a custodian that gets rugged, like a Celsius or something like that. But we need to remember that Celsius going under does not affect Bitcoin. Again, it's bad for the people who get burned, but like that's not a risk of like, oh, if a Celsius happens, then Bitcoin is dead, right? Like that's a totally
it'll crush price for a while, but
yeah, like it's not a good thing. Bad for sentiment. Users might get spooked, all that kind of stuff. But like Bitcoin is fine after that. So the much bigger concern is what Quidda mentioned first, that like, hey, you know, influence over the network in some sort of bad way. And that's a long conversation. But I just wanted to flag, like, if someone, you know, uses a custodian and the custodian happens to rug them, it's bad for those people, but that doesn't take Bitcoin down as a network.
Correct.
Agree. And real quick, just Brandon, I really liked what you said, and honestly, I think the right question for Bitcoiners to be asking is along the lines of what you said. If only 1%, how can we design and manage and run Bitcoin where if only 1% of people do self-custody, we're still in a good spot? Mm-hmm. I think that is 100% the right question to ask, rather than how do we get everybody to do self-custody.
100%.
It definitely increases the chances of some kind of derivative, you know, inflation, you know, paper Bitcoin situation. That's the biggest risk to me. If there's, you know, 99% of Bitcoin holders are holding it through some kind of proxy, you know, that FTX was doing it. You know, there's, I don't know, it'll probably be done, right? Somebody's going to be unethical about it and try to get away with it. And so that's the biggest risk to me. The only way to really audit the ledger is to have complete self-custody. We're not going to ever have that, but that's important. And proof of reserves as well.
Yeah, I think where we want to stress here, there's another dimension. There's custodied or self-custody, and then you look at the concentration risk amongst the coins that are held in custody. Right now, Coinbase is scary. They have a huge institutional business, a large retail business. You add it up, they have a scary percentage about the Bitcoin. We don't want that. So what we want is, it's okay if 50% of coins are held in custody, but we want those spread out across many jurisdictions, many banks, right? More of a spread out the risk, like a free banking model where shenanigans happens, but the pain is isolated, right? Mm-hmm. So we don't want Coinbase to get too big to fail and get bailed out. That's when things get scary.
I'm going to do a shameless plug here. I wrote an article called "Will Bitcoin Follow the Rise and Fall of Gold?" And it's like this exact topic. Basically, will there be fractional reserve on Bitcoin? Will it follow some of these same paths? It's a topic I'm fascinated in because it gets into monetary history as well as how Bitcoin is different and how I think things change. So if anyone out there is listening and you want to find that, and if you have any comments on it and you want to, you know, DM me or send it out there on Twitter, please do.
And what was it called again? Will Bitcoin follow the?
I think the regular title was "Will Bitcoin Follow the Rise and Fall of Gold?" Here you go. Will Bitcoin follow gold's monetary rise and fall? And then the subtitle is a look at Bitcoin's scaling strategy. And then I guess this is the subtitle: Bitcoin can achieve its ultimate goal to be a neutral base layer of a new monetary system for billions of users worldwide.
Awesome.
What else do we have here? We've got quick hit. Another crypto pro crypto guy has been nominated for head of the CFTC. So now we've got in the Treasury, in the CFTC, and what's the other one? What's Letnick's? Commerce, right? Yeah. So I'll have crypto experience. If you follow me on Twitter, you may know that I don't have the highest regard for A16Z for their involvement in, you know, pushing and funding a whole bunch of shitcoins, dozens, maybe 100 of them over the past 5 or 6 years, and it's just a list of failed shitcoin scams that they helped prop up and probably, you know, cashed out with insider coins. So I've kind of ripped them a little bit on Twitter for those reasons, but you know, here's yet another pro crypto guy in the administration.
It's all lining up. And back to your earlier comment, I do think the Abu Dhabi news gets some wheels turning in the dialogues in the U.S. I think you can't overlook that. And I think it also gives the green light for the next country to announce. It may not be the U.S., right? I think there are other players, and I think it's a lot easier to be second rather than to be first with something like this.
All right, another quick hit. We've got 9 companies now with over $1 trillion in market cap, and 10 years ago there were none.
I think it's crazy because I remember the hype and the coverage when, you know, 1 or 2 of these. I think who was the first one? Was it Apple? I want to say it was Apple was the first one to hit $1 trillion. There was just like really big deal. And now we've got 9 that are past $1 trillion. We've got, what is that? 5 that are past $2 trillion and 3 that are above $3 trillion. I mean, part of this is
what could possibly drive this kind of inflation in these the prices of these companies? Have they just created so much new value in the past 10 years that their market caps have 2, 3, 4x?
So, yeah, I mean, we do have to give them some credit, right? These are dominant companies that are producing real things. They have real users. They're dominant. But part of this is obviously inflation. I would say part of it is inflation, but part of it is that people are using, any Bitcoiner is going to know and appreciate this. Part of this is that people use these assets generally through ETFs as a savings vehicle because they're forced to do so. So now you have the whole rise of passive investing. People take a portion of their paycheck and just put it in SPY or QQQ, whatever it is. That's fueling a lot of this. You know, 2 things can be true at the same time. They are dominant companies that have real business models, real clients.
Yeah. But
you have to also attribute some of this to inflation and the monetary premium that these assets have.
Right. There's and the fact that there's no store value property in the dollar anymore.
Yeah.
Yeah. So we're going to store our value in tech company stocks.
Yeah.
And real estate.
That's what's happened. I mean, these tech stocks are the store of value, you know, in the modern financial system. That's for both America and international investors.
It'd be a real shame if there was a non-sovereign digital store of value asset that came in and disrupted all that.
Interesting idea. Yeah. All right. So there we go. We got a CPI numbers. Speaking of inflation, the January 2025 CPI report, major components, year-over-year change. Transportation leads the way with 8% inflation year over year from January 2025. Gas utilities at 4.9, shelter at 4.4, and we go down to the deflation in fuel oil at minus 5.3%. There's 3 of these major components: gasoline, new cars, and fuel oil, all related to one another, are down year over year. And what's interesting is what's transportation? Gasoline, new cars, and fuel oil down. What does transportation mean? Up 8%. Is that like
planes,
trains, and buses, and
I think shipping.
That kind of thing. Shipping would be a big one. So yeah, John, you wanted to get this chart in the mix here, so I'll toss it over to you.
Yeah, I'll just say real quick, you know, CPI data gets reported once a month for the prior month. So this is January, as the chart is titled there. It was just released on Wednesday. People talk about it a lot. It's part of, you know, the Fed's mandate. So CPI just printed 3% year over year. That is clearly above the Fed's target of, you know, 2%. They don't even look at CPI specifically. They look at something else called PCE, but the average person looks at CPI as the measure of inflation in the economy. So it's just a data point that what generally people look at for inflation is higher than, you know, what the Fed generally targets. If you look at what the market is pricing in for rate cuts or just rate movements, they don't think that a rate cut is coming until potentially June or July or later. we're not really big on this show of like, being Fed hawks and, oh my God, they cut the rate by 25%. That's going to move markets dramatically. We kind of fade that mentality. But in terms of macro, we just wanted to highlight it. It comes out once a month. So year over year CPI in the US, the official number out of the BLS is 3%.
Yeah. And this, surprised some people, came in hot. Was this the first CPI of the Trump administration?
Yeah, and this one's for the month of January. So, technically it was if Trump officially started January 20th, he had it was a mixed month for who was technically president. But yeah, first data release within Trump's presidency.
Yeah, interesting. It's ultimately the market shook this stuff off, I think, is what really caught my attention about this is we just took it in stride.
Yeah.
Let's take a look at, we've got 2 topics left on the agenda here.
I also think that
we're going to start out this one with the Dahlia video.
Adequate amount of gold in their portfolio. In other words, gold, if you didn't have a view of the market, like the gold market, it's a very effective diversifier under the other portfolio, because when bad times come, gold is a very effective diversifier. So I think that having something in the vicinity of 10% or maybe a little more, 10 to 15% in the portfolio is worth giving some thought to. And when I say gold, some people might say digital currency and so on. I own some digital currency. I own some Bitcoin too. But in other words, debt is money and money is debt. And we have a problem. We have a supply-demand problem with it. And so a good diversifier for a typical portfolio is that.
All right, a couple things I want to signpost before we dive in here. One, notice that he said, when I say gold, I also mean digital assets. And he said, and I have some Bitcoin too, right? So what does that mean? If you reverse it, it's into the meme that we post pretty much every day on the Swan Twitter handle, Bitcoin, not crypto. Separation of the two ideas. I love that he, in his mind, is separating digital assets and Bitcoin. That is a good sign. And then the other one is debt is money, money is debt. I know Steven and John have been kind of going back and forth on this idea, and I would love to sit on the sidelines with some popcorn for this one.
So this one honestly is like economic definitions. Like if we really wanted to get into it, it would take way too long, and I think most people would be bored by it. So I will just say I'm a big believer in that money is a distinct thing from debt. By definition, money, I'm talking base money, not your bank deposit. Your bank deposit is debt. Your bank owes you that. I would argue money is an instrument where no one is owed something. When you hold Bitcoin, when you hold gold, even when you hold fiat currency, there is no borrower-lender relationship. There are some counterpoints to this if you use debt in like a wider universal context, but it gets into semantics a little bit. I will just say the reason I get fired up about this, it's not just me debating semantics, is the MMT community uses this to kind of justify some of their own thinking. They push the idea that like all money is debt, no matter what type of money, it's all debt. So they're just like, and that allows them to end up in a place where they're like, yeah, so the government can just print a bunch of tokens. It's all debt. Everything, fiat currency is a liability to the state. And it gets them into a lot of what I think are flawed conclusions. Like I said, I think most people, this is not a topic near and dear to most people's hearts. So I don't know how much time we should spend on this one.
If it's near and dear to any group's heart, it might be Bitcoiners and finance nerds. Steven.
Yeah, I mean, this was the way this conversation came was more just like there was someone we both know that made a comment about money being debt, and it's not so much my stance. I'm not so much arguing that, but we were having a conversation. I get why they're saying it, but they're saying it kind of in a different way. And just the way I was trying to explain like why they say that is it's not so much that it is, and this is where it gets kind of, I think it is misused. And I agree with John that they conflate formal debt where there is actually like a balance sheet liability, like there's actually like money has been lent or something. And that's not what they mean, although I think they use like an equivocation to kind of hand wave between that definition and the other one. When this gets said, the way I can understand it is they're saying that money is a claim on future resources. That is like its nature. When you have money, what you have is a claim on future work, future resources, future labor. You can exchange that money for work and labor and things and value. And so in that sense, it exists as some sort of like perpetual, durationless, universal claim. And so they go from that and they say, okay, so money is a form of debt, but it doesn't translate well to like the conventional type where there's a liability, there's an issuer, there's a counterparty. Like, yeah, none of that exists, or at least it shouldn't exist in good forms of money. You can obviously have forms of money that are collateralized by debt and as such do have those qualities. But I'm a little sympathetic. Like, I'm a little sympathetic to the kind of line of reasoning that says, well, if it's kind of a universal claim, is that not debt-ish? What is the closer thing that you would qualify the nature as? And I get how they get there, but again, I think the thing me and John really agree on is they then equivocate between that and like conventional debt. They say the two are the same, and therefore there's no difference between debt and money. And there is clearly a difference between debt and money.
So we got to get Ray Dalio on the show to explain what he meant by that statement. That's our takeaway.
All right, we'll get Ray on. Stay tuned, everybody. All right, last one for the day here is the mempool cleared for the first time in 2 years or so. For those of you watching who may not know what the mempool is, this is where transactions that you send out, that you broadcast out to the peer-to-peer network, sit and wait to be included in a block. This right here, this graphic shows that from mempool.space, which is a great place to watch what's going on in the mempool, shows that there's less than 1 block's worth of transactions waiting to be included in the next block. We're about 6 blocks deep now from when that happened. There's 4,242 transactions, according to my desktop widget, that are waiting to be included in blocks. So it's starting to fill back up again a little bit. But this is interesting. I know Marty Bent has and Matt Odell has gone round and round about this over the years. Whether or not this will actually happen, that it does always clear at some point. And if it does, what does it mean? Is it a cause for concern? I did have one person come up to me in New York at the Swan Signal event and said he was worried about Bitcoin's security budget if the mempool can continue to clear and that we're seeing a drop in the usage of Bitcoin. What do you guys think about the mempool clearing for the first time in a couple of years, especially in the middle of what we assume and have been calling a bull market that started about this time last year before the halving?
I'll offer up a quickish take, and I'll just say first that there are a lot of differing opinions on this. I'm not trying to say that what I'm about to say is the final word on this, but my view of this is like, this is showing that demand for block space at this particular point in time is relatively low. That's another way of saying, why did the mempool clear? I think it just highlights the fact that we're in the stage or the phase where Bitcoin is excelling as a store of value asset. Like, that's what people generally want to use it for. If you see Bitcoin starting to be used much more for transactions, whether that's large or small, just Bitcoin changing hands, on-chain transactions, then you would see more demand for block space, and that dynamic supply-demand market would bid up the price of getting those transactions through. So to me, this is just evidence that we're in the store of value phase. I think that is logical. That makes sense to me. We're not there yet for payments. That's what this says to me.
Yeah. I think that's right. You know, it's Bitcoin is being used as a store of value, and I think the biggest takeaway from this is that the kind of emergency scaling procedures, it's kind of a weak argument, right? Like we're really not in an environment where we have a real shortage of capacity. It's not to say that one day we won't get there, and it's not to say that you don't need to front run that. But Bitcoin is succeeding as a store of value, and the network has enough capacity for that currently. You know, we need to keep an eye on it, and you know, I think a lot of the capacity gets delivered off chain, though. I mean, that's the thing, is so much of the demand, the movement, it gets handled by custodians. And I mean, Hal Finney said as much in the early days. Like, this isn't an anomaly. The market has found an efficient way to deliver throughput without too many changes happening to the base network. So I think, if anything, this cools maybe some of the urgency that some people have said of like a desperate need to scale the transaction capacity rapidly.
A couple things on this one from my end. So I think it's also fair. Well, I agree. It's store value time. It's not medium exchange time. I also think it's fair that retail FOMO feels significantly less as a percentage of the market right now than previous cycles. I think institutions are in charge of the price. A lot of the flows are going that way. So that's not too surprising. I also think the major, why did the mempool clear now? I don't think that's really that related to store value, medium exchange, or new buyers. It's mostly because the ordinals, runes, and other type of L2 hype sort of just faded away, hopefully forever, but at least for right now. And that consumes a lot of the block space. Now you go on to if we go back to arguments we hear constantly, some of them circular. So fees too high, Bitcoin can't be money, too expensive. Fees too low, Bitcoin cannot be secure, right? So you go round and round on the Bitcoin haters with these two. I think Bitcoin fees are too high, can't be money. I think that argument's mostly behind us. We've accepted L2s, whether those L2s are a Lightning, an ARC, or institutional players. The fees too low, cannot be secure long-term, mostly coming out of the ETH crowd, of which I would say, hey, ETH bros, why don't you go paddle your own canoe? You're in bad shape over there. I don't know what you're throwing stones over here for. Call me in a decade. And if I would take their argument a little bit more seriously, I think a good way to think about block space is that it is a fixed commodity, fixed supply commodity. Roughly, we might make minor technological improvements to stuff more transactions in there, but it's more or less fixed. Let's just say 500 on-chain transactions per day. It's roughly that. And that's a lot of transactions in 2013, right? When people still thought it was going to be free forever because they didn't extrapolate very far. But 500K on-chain transactions is not a lot if you start looking at a global store value asset, $10 trillion, $20 trillion or more. And so all it takes is demand for those transactions to cross some little threshold. Then all of a sudden the price of block space approaches infinity because the supply of block space cannot expand. And so I do not see this as a concern now or in the future, because if Bitcoin can't sustain 500K transactions on chain in 10 years or 20 years, Bitcoin was always going to fail. And so there's no screeching worth it right now that we need to worry about. And I do think John's point on transitioning to a medium of exchange later does start to put a bunch of organic pressure on chain. And I think that is true. Yeah, that's my take.
Yeah, all great comments and thoughts. The only one I would add is that, ETFs, for instance, and exchange activity is sort of a way to scale Bitcoin. I mean, obviously they're proxies, but those transactions that are happening are not happening on chain because they're batched. And I remember, back in the day, 6-7 years ago or something like that, it was a huge deal to call out on exchanges to start batching transactions as a way to help scale Bitcoin, because they were just like every transaction was going on chain instead of, putting them all together, putting them into one big transaction, saved way, tons of space. They must be batching transactions at BlackRock. And if that's happening and people are wanting to get exposure to Bitcoin price through an ETF, for instance, then all of that stuff is trading, and then they'll settle to the blockchain once a day or something like that with one big transaction. So that's another thing that's happening to keep an eye on as a reason why mempool might decrease when Bitcoin usage is actually still going up. All right, we have one more little thing that John just threw here into the chat. So let me get this pulled up. It's not that one, but let's see. Let's try this. Here we go. All right, John. Little Valentine's message from the ECB.
This is a real tweet. This is not us making a joke. The ECB actually sent out a little Valentine's Day rhyme here. Roses are red for the listeners. Roses are red, violets are blue. Inflation is on track to settle around 2. That comes from the ECB.
You sure? You sure about that?
Yeah, that's some wishful thinking on their part. I'm also reminded of a chart. This is a phenomenal chart. It was posted in 2022 or 2021 when we had the big inflation spike around the world. They showed like every country's inflation rate and then what was the consensus for where it would go in the next 12 months. And basically economists all just draw a line from wherever it is to 2%. Like there's no like insight. They're not like evaluating fundamentals. They're like, oh, it's at 4, it's going to go to 2. Oh, it's at 8, it's going to go to 2. And then you saw the actual line of where it went. And it was like most of the time, at least in inflation spikes, like not following that line they sent. So anyway, this is like what the ECB wants to be true. This is what they tell you is going to happen. So I just thought it was hilarious. Number one, that they're trying to be funny on Valentine's Day, and that this is how they chose to do it. It's ridiculous.
2 quick points on this one. What was happening inside the ECB that led to that tweet? Right? Are they like, this is Elon's era. We gotta hire a 22-year-old with an Anon account like Big Balls. Put him on the account. We gotta make it irrelevant. I would love to know that story. Number 2, your comment about drawing straight lines to end up where they want to go with their predictions is a beautiful summary of what's wrong with central banking as an entire institution and central planning in general. And I think one way to think about it is that central planner types, our bankers among them, they would like to believe that the economy is a complicated system, which means you just need to be smart, digest the variables, do some math equations, and you can predict how the system will respond. However, the economy is not a complicated system. The economy is a complex system, which means you cannot predict the variables, and it's too complicated for you to even assess what will happen. And so the economy is complex. They treat it as a complicated system, and then unintended consequences continue. So that's where Bitcoin fits in. Bitcoin accepts the fact that the economy is a complex system. It does not try to steer the economy. Bitcoin adapts and responds to the market's demands. And it responds in a way that doesn't change its core economic parameters. So what does that mean? It means that the economy actually shifts around Bitcoin. And that gives us more long-term stability in the economy. However, it also brings us a little bit of short-term price stability in the currency, right? So fiat says, okay, fine, we'll manipulate this thing all the time. We'll keep your currency relatively stable. However, we accept enormous blowups, massive catastrophes because we just hide the risk through intervention, and then it all blows up. Bitcoin's the opposite. It says, hey, we're going to accept short-term price volatility on Bitcoin. However, if there's any sort of risk in the system, it's realized immediately, settled immediately, in which case the risk of giant economic catastrophes goes way down. So we get a little bit more systemic stability on the other end.
Nice. Great breakdown. Any final words, guys, before we sign off for today?
Shout out Max in the chat for recognizing this shirt. And then also shout out Vinny, who said 4 is around 2, right? Yeah, and there's a call out to you here, Steven. He said, which, I think, Steven, this looks like a green tee to me. So
I'm getting a call from NBC guys. I'm gonna take it.
Wow. Name drop.
See ya.
Did he just cool guy us like that on
He
the
totally
screen?
did. As I was trying to roast him, he just like threw it right back at me. And shout
David
out.
Sachs is calling. I better.
Ray Dalio's calling me. I got to run, guys. He heard
it's
that
President,
we want him on the show.
It's President Musk on the phone. Here we go.
I was just going to shout out Vinny for making that comment. 4 is a round 2. The ECB said a round 2. Who knows what that means, right? Could be anything. They hedge themselves.
That's so good. Oh man, Governor Trudeau keeps texting me. My final thought is that I looked at coinmarketcap.com today and I noticed an interesting number at the top, which was that there's now over 11 million cryptos that CoinMarketCap puts on their page. So we're doing great, guys. Guess what? 2/3 of those 11 million market cap is Bitcoin.
Yeah.
So Bitcoin's worth twice as much as the 11.2 million other coins combined.
I'm just glad we could help Steven get his thoughts together before MSNBC or CNBC. Sorry, not CNBC. All right. Thanks, gents. Until next Friday, 11 a.m. Pacific, 2 p.m. Eastern. Thanks, everyone, for joining in. We had a fun time today. We had a slow week until today. A bunch of news dropped. We covered it all. Wisconsin's pension fund, Abu Dhabi's sovereign wealth fund, State Street and Citibank are going to custody Bitcoin. Talked about the realized cap, CPI, gold and Bitcoin, trillion-dollar companies popping up and out of nowhere because inflation's high and people are using those equities as a store of value. Tons of great stuff. Join us again next week for more Signal here on Swan Signal Live, and check out Swan. I'll take a quick look here. We've got a card, a Bitcoin rewards credit card. That will be dropping sometime in Q2, hopefully early Q2. So go over to swan.com/card and get priority access. Get on the list there, and we'll keep you updated about the details of the card, and that will drop. Head over to your app store and just type in Swan Bitcoin. Grab the Swan app. If friends and family are looking to get into Bitcoin, they're finally ready. Just download the Swan app, have them download it while you're standing next to them. They can get set up and start buying Bitcoin in 2 minutes. And it's a great onboarding process, super simple and really just a delightful experience. So check that out. Also check out Swan IRA. You can buy real Bitcoin and put it into your IRA, not proxies. This is not an IBIT situation. You're actually getting real Bitcoin. You can put it in your IRA and grow it with the tax advantage status that IRAs confer. You can also go beyond legacy finance with Swan Private. Steven is head of Swan Private. John is a managing director of Swan Private. And you can find videos of our clients here talking about Swan Private and about IRA at the top of each of these pages. And then we also have Swan Vault, and that is Adam Back, who is cited in the Bitcoin white paper, absolute legend. There's Lynn Alden talking about Swan Vaults. Gives you full control over your Bitcoin, but you don't have to go it alone. It is a collaborative self-custody solution. Again, super amazing onboarding. In my opinion, the best in the industry. So thank you so much for checking us out, and check out Swan at swan.com. And we will be back next week here on Swan Signal Live. We appreciate you all. Thanks again. We had tons of people in the live stream today, which is very exciting.